Good afternoon. It's Tuesday, June 11, 2013, and I'd like to welcome everyone to our live Ask the Analysts webcast today. We've invited two grain experts to provide their outlook ahead of tomorrow's USDA 2013 crop production and WSDA reports. I'm Chris Grams. I'm with CME Group, and I'm going to be moderating this afternoon's discussion. Before I introduce our grain experts, who are just to the left of me, I want to add a couple of quick reminders. If you're joining us online today, you can begin to submit questions for our grain analysts at any time during the webcast. There's a box in the lower right-hand corner of your screen where you can type in questions and hit submit. So please feel free to begin submitting questions at any time. Archived version of this discussion will be posted on the CME Group TV YouTube channel later on this afternoon. That's youtube.com/CME Group TV. So at this point, I'd like to briefly introduce our experts. To my immediate left, Terry Roggensack, who is founding principal with the Hightower Report. Terry has 25 plus years experience in commodity and financial futures industry. In the late 1980s, Terry briefly lived in London as acting director of a new London clearing firm. And for more than 10 years, Terry was director of research at Stotler & Company before he picked his successor, David Hightower. Terry is frequently asked to present at these CBOT press events, and particularly when major fundamental shifts occur in the marketplace. During a dangerous monsoon season, he provided hedge strategies for the government of India, and he provided an extensive hedge proposal for managing the government of Canada's exposure to ongoing producer income support and subsidy programs in the grain and livestock sectors. Terry has provided hedge consulting to China's national soybean buyer, as well as cash grain strategies to the largest corn trader in the U.S. Thank you for joining us, Terry. To Terry's left is Greg Wagner, who's president of GWX Ag Advisors. For more than 25 years, Greg has worked with the agribusiness community exclusively and provides cash marketing advice and risk mitigation strategies tailored to agricultural producers and end-user needs. His perspectives on agricultural markets have been extensively featured in broadcast and print media, both the U.S. and internationally. Greg, thank you for joining us as well. I would note that both of these gentlemen had an opportunity to be here on the floor earlier today and spoke with AgriTalk Radio, previewed some of the comments that they're going to share with us this afternoon. Speaking of those comments, without any further ado, Terry, I'll let you go ahead and kick us off. What are we looking at ahead of tomorrow's June reports?
I think in general we're looking at a transition year from old crop extreme tightness to a new crop demand season that is questionable on the demand side, and certainly the supply side looks to swell. Of course, that will mean we need some decent weather from here. So far, we have not had good weather. We're officially looking for a 2.3 million acre decline in corn planted acres, ending stocks at 1.8 billion bushels. Short-term weather outlook, though, has, along with the insurance potential for northern Iowa and Minnesota area, suggests that we could lose 2.5 to 3.5 million acres of corn this year. Rarely does a wet spring result in poor crop conditions. The crop which has emerged should likely see some very good improvement in crop conditions over the next 2 weeks. We're 95% planted as of the weekly update from the USDA yesterday. That leaves 4.75 million acres left to plant. In 1995, we were only 88% planted by this date, and we ended up losing a total of 3.9 million acres to the weather that year. So estimates that go much above the 3 million acre loss look like a little bit far-fetched, but we do have big differences in insurance programs this year, revenue insurance especially. So a lot of producers up in Minnesota might not want to switch to soybeans. They might want to just take their insurance program. If we do see a 3 million acre loss and a 158 bushel per acre yield, we could be looking at a 1.5 billion bushel carryout, 2.04 2.004 billion bushels is the current USDA estimate. I think the average trade estimate for this report's about 1.8 billion bushels. And the range of estimates, though, 1.2 to 2.2 billion bushels. So pretty wide range of estimates for ending stocks. It's probably going to be the key factor for the report tomorrow. If we do end up with a 155 yield, that'd be a 1.27 billion bushel carryout and a 9.8% stocks to usage. So we'd be back into a fairly tight situation if we do have a combination of loss in acres, significant loss in acres, and a yield slipping back down to 155. If we do have a 160 yield, we're talking about a 1.7 billion bushel carryout, which is really still down from the current estimate at 2 billion. Old crop is a potential powder keg still, but we won't learn a lot for this report. That'll come after the June 28th stocks report. We could see on the world front, we could see 2 million ton increase in Brazil corn. Old crop and world ending stocks are at 125.4. We've got them near 125 for this report. For new crop, last month we were at, the USDA is at 154.6, but the drop in U.S. production alone be near 12 million tons. So we still will be looking at about a 144 million ton world ending stocks. Some traders are as high as 155. The bottom line is, though, you could get a chance of a bullish surprise for the report. 538 solid support for December corn. On a minor weather scare, if we see a little bit of a weather scare, we could see a bounce to 588.5. And if we do get a dry weather actual problem, we could be looking at a run at 606 on the upside for Dees corn.
Great. Thank you very much, Terry. Greg, I'll kick it over to you. I know we've covered some ground here, but looking forward to your perspective as well.
Yeah, it's interesting because once again we have a flip in weather, and as opposed to 2012 when we had hot and dry conditions, now we're sitting in wet and cool conditions and delayed plantings. And you know, from just a historical perspective, back-to-back years, you see the corn market, despite the conditions, the overall agronomic conditions as far as dryness and heat and so on and so forth, the crop got in the ground, and everybody was pretty confident about that. You know, early part of, you know, statistically, you get an early planted crop, and you have the potential for higher yields. Obviously, that's not the case this year. However, I would put, as far as the production potential for corn right now, it's a coin toss, because you could go back in 14 years where we were similarly in a similar situation as we are now with delayed plantings. After all, this is not a unique situation. This isn't something that just oh my gosh, we've never had a late planted corn crop. But if you go back and take a look at the yields, it really is a toss-up. And ultimately, in other words, yields go below trend or they'll go above trend. And right now, USDA has plugged in their first pass, the May WASDE report, a yield of corn of 155. They have 45 bushels an acre for corn. So they have already kind of, I would say, gotten ahead of the curve as far as the corn goes. I wouldn't look for any dramatic adjustments and I don't think the trade is as far as corn yield, but it's interesting that the soybean yields, looking for average trade estimate, is about 0.8 of a bushel cut from the from that 45 bushel an acre initial yield. But one of the things I think that's a very important consideration here is that the USDA introduced a new yield model for this year. They've used, I would figure, about 8 different yield models over 30 years. And the yield model that they're using this year is, the variables are Obviously, it's late planting, essentially how much is planted by June 15th, and they're using 8 states, Illinois, Indiana, Ohio, Minnesota, Missouri, Nebraska, and South Dakota, as far as which over the course of the 25-year history of this model produced about the average of 76% of the corn crop. But they're looking at the variables are going to be late planting, which USDA addressed in the May report, and it's going to be deviations from June temperature, not necessarily the precipitation, but June temperature, and deviations where it would really be exceptionally hot, where you're actually going somewhere in statistically at the 10% of the tail of the average temperature in June, and then it's July temperature as well as precipitation, and there's a little bit of a nonlinear aspect to that in that excess precipitation, as far as precipitation, a shortage of precipitation in July will have a greater impact, a negative impact on corn yields than excessive precipitation. Now, with the soybean yield model, as it comes, and this is very important because this is what the USDA is going to be working on, and this is what's going to be driving these yield estimates from the USDA through the course of this growing season. They're using 7 states. Those 7 states are the same as the corn, with the exception of South Dakota, and produced about 70% of the crop over a 25-year period of 1988 through 2012. However, interestingly enough, one component or variable of that weather model that they're currently using does not include any late planting of soybeans, which is clearly the case this year. So I question whether or not USDA is even going to adjust their soybean yield number, which is, ripples across the whole balance sheet. That's a production number. And of course, the other thing which Terry addressed and everybody's acutely aware of is acreage. But it's really a little bit too early to tell what exactly yields are going to be. So I'm sure the market is going to be focused like a laser beam on weather, as it has been going forth. And the other, observation I would make is that the focus of the trade has really been more on the supply side of the issue, supply side of the ledger, as opposed to the demand side of the ledger.